Hey everyone, welcome back to Corporate Dakota. Today we're diving into a Form 8K filing. I know, it sounds like something out of a sci-fi movie, but trust me, there are some real nuggets of information in here, and something smells fishy. Let's try to find it. If you want to join other corporate document decoders such as myself, join our Discord. The link is in the description. This report is all about Republic Digital Acquisition Company, which is a special purpose acquisition company, or SPAC. SPACs are basically blank check companies. They raise money through an initial public offering with the goal of finding a private company to merge with, effectively taking that private company public. This filing details how Republic Digital just completed its own initial public offering, or IPO. They sold shares to the public to raise money, so now they have funds to find a company to buy. This Form 8K is a snapshot in time. It is a current report companies file with the Securities and Exchange Commission, or SEC, to announce major events that shareholders should know about. In this case, it is about Republic Digital's IPO and what happened right after. The most important date here is April 30, 2025. This is when the events being reported actually happened. Think of it as the day of for everything in this report. Republic Digital Acquisition Company is the name of the company doing the IPO. They are based in New York, but officially incorporated in the Cayman Islands, which is a popular choice for SPACs. This is their employer identification number, or EIN. It's like a social security number for a business. This is their area code. The telephone number is used to communicate with the company. The company is offering units to investors. Each unit is a package deal. One Class A ordinary share, which is like a regular share of stock, and 1/2 of a warrant. A warrant gives the holder the right to buy more shares in the future at a set price. In this case, to buy one ordinary share, you have to provide 11.50 cents per share. These are the ticker symbols. It's how the units, shares, and warrants are identified on the stock market. RDAG is for the units, RDAG is for the units, RDAG for the warrants. These boxes being unchecked simply mean that the company is not using this filing to also cover other types of communications related to things like mergers or takeovers. It's a formality confirming this filing is just about the IPO. This box is checked, which means Republic Digital is considered an emerging growth company. This gives them some breaks on certain reporting requirements, meaning they don't have to follow all the same rules as bigger, more established companies, at least for a little while. This section is about the important agreements Republic Digital entered into to make the IPO happen. These are contracts with the banks helping them sell shares, the company holding the money raised, and others. The company's registration statement, which is like the official application to do the IPO, was approved by the SEC. That means they got the go-ahead to sell shares to the public. They sold 30 million units at $10 each, raising a total of $300 million before expenses. That's a lot of money to go shopping for a company to buy. These are all the agreements they entered into in order to complete this process. So that's an underwriting agreement with Cantor Fitzgerald & Co. This agreement outlines the terms and conditions under which Cantor Fitzgerald, as the underwriter, agreed to sell the company's units to the public as the underwriter agreed to sell the company's units to the public. Thicker warrant agreement with Continental Stock Transfer and Trust Company specs the terms of the warrants, including exercise price caps, allowing founders registration rights. Agreement grants certain security holders, such as the company's founders or early investee per share, expiration dates, and other administrative details collected on Mon LLC and Cantor Fitzgerald & Co.'s against a specified time. Mon LLC and Cantor Fitzgerald & Co. against warrant agreement with Continental Stock Transfer and Trust Company. This agreement establishes a trust account where the proceeds from the IPO. These warrants are similar to those offergems of the warrants, including exercise price sex allowing rights, restrictions on transfers of shares, and other governance matters. Our letter agreement outlines certain agreements and understandings between the company, its officers. Alongside the IPO, the company sold warrants privately to Republic Sponsor 1 LLC and Cantor Fitzgerald. These warrants are similar to the ones offered in the IPO, but they weren't registered with the SEC, hence the unregistered part. They sold over 7 million of these private placement warrants at $1 each, raising an additional $728 million private placement warrants, and the representative purchased 2.64 million private placement warrants, and the representative purchased 2.64 million private placement warrants. Right after the IPO, they appointed new independent directors to the board, Leah Kajajavi, Barry Finkelstein, and Robert Matzer. They also made appointments to the Audit Committee and Compensation Committee, which are important for overseeing the company's finances and pay practices. Directors' terms expire in different years. This is done to ensure that there is always experienced board members around to lead the company and avoid mass resignations that would leave the company rudderless. To get ready for being a public company, they updated their official governing documents called the Memorandum and Articles of Association. These are the rules the company operates under. This section confirms that the $300 million raised from the IPO and the private warrant sales is safely tucked away in a trust account. This money can only be used for specific purposes: completing an acquisition, returning the money to shareholders if they can't find a deal in 2 years, or for limited expenses like taxes. The company issued press releases announcing both the pricing and the closing of the IPO. These are standard announcements to let the public know the IPO happened. The CEO, Joseph Nagar, signed the report, making it official ex-ting. Now, what does all this mean? Here is where things get interesting. Republic Digital Acquisition Company is now a public company with $300 million in the bank and 2 years to find a private company to buy. The clock is ticking. Here's my take. On one hand, SPACs have been a popular way for companies to go public quickly. However, they've also faced criticism for sometimes leading to overvalued companies and poor performance after the merger. The whole structure seems kind of scammy to me. One potential red flag is the fact that they are incorporated in the Cayman Islands. The key risk for Republic Digital is whether they can find a suitable acquisition target within the 2-year time frame. If they can't, they'll have to return the money to shareholders, which isn't ideal. The fact that Cantor Fitzgerald gets warrants might make you wonder if they truly want what's best for shareholders. Overall, the success of Republic Digital depends on their ability to find a good company to merge with, and that's where the real work begins. This is not investment advice. Alright, that's our breakdown of Republic Digital Acquisition Company's Form 8K filing. What's your take on their plan and the SPAC structure in general? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.